Starting today, we launch our new series, Election 2019 State of the Market, in which we are going to analyze how past elections and successive governments have dealt with various issues in key sectors. Today, we start off with a deep dive into the banking sector, its performance over the last 5 years, and the key issues that have been left behind for the next government. Joining in will be three veteran former bankers. We have S.S. Mundra, also former Deputy Governor of the Reserve Bank, Mr. A.K. Purwar, former Chairman of the State Bank of India, and Neeraj Gambhir, formerly of ICICI Bank and Nomura, and now a veteran money market expert. But before I get to my guests, let me hand it over to Abhishek Kothari to give us a rundown of how the numbers stack up at the end of the 5-year NDA term.
Well, in the last 5 years of BJP government, various initiatives have been taken. However, the growth has been on the weaker side for the banking sector, which also faced a huge issue of non-performing assets piling up. Let's take a look at the government initiatives that have been undertaken. The Pradhan Mantri Jan Dhan Yojana, which was aimed at bringing the unbanked people into the banking system, was a huge success with deposit mobilization of over 95,300 crores, and they had brought in 35.2 crore people into the banking system. The Pradhan Mantri Mudra Yojana for the MSME loans, however, is believed to have been plagued by high non-performing assets rather than the growth over there. The government's aim of, housing for all by 2022 under Pradhan Mantri Awas Yojana was a positive move. However, it got constrained by the fact that supply side remained constrained due to developer stress. But what was the most significant move was the introduction of insolvency and bankruptcy code to resolve the stress assets of the banking sector. Over rupees 3.5 lakh crore of assets have been referred to by RBI to the NCLT under this program. Never mind the recent hiccups on federal circular. Another measure to nurse the public sector banks was to, give them a healthy capitalization of rupees 2.6 lakh crore, which was the highest in the banking sector. Consolidation in the banking sector was given a push with weak bank and good bank, that is Dena Bank and Vijaya Bank, being merged with a large bank, that is Bank of Baroda. Even we saw the fact that IDBI Bank was bailed out by LIC. Demonetization, however, was a disruptor that did lead to, a short-term liquidity surge in the banking sector, but it had several unwanted side effects. Notably, the banking sector has seen very low business growth during the NDA regime, with the fact that loan growth between FY14 to 19 averaged at 10.4% versus 17.4% between FY9 to FY14, and deposit growth was in single digits at just 9.5% between FY14 to 19. That compares to about 14.2% between FY9 to FY14. The gross NPA ratio actually spiked from 4.2% in FY14 to 11.8% in FY18. However, with the help of IBC introduction, the gross NPA has now reduced to about 10.4% as on Q3 FY19. You look at the market share in terms of the market performance of the banking stocks. Bank Nifty has actually clocked a 5-year CAGR of 18.9% versus 11.6% for the Nifty, which indicates that there is an outperformance. However, if you compare to the previous 5 years, the growth rate is on the lower side, because in the previous 5 years, the Bank Nifty had grown by 25%. Back to you.
Okay, that's a masterly mix of numbers and policies, Abhishek. Thank you very much for that great summary. And now, from a masterly analysis to the masters of the sector itself, Mr. Mundra, Mr. Purwar and Neeraj Gambhir, thank you very much for joining me. Mr. Mundra, let me start with you. First, the first initiative, time-wise, that the government introduced was Jan Dhan.
Yeah.
How would you rate it? Was it using the banking sector for a government purpose, therefore leaving the banking sector with more costs and less benefits?
See, let's understand one thing, that in when there is a large public sector banking system, and there would be always some national agendas, which these are the vehicles. So from that perspective, I would say Jan Dhan had been a good move. It was taken on a mission mode and bringing so many people to the banking system in a given time. And of course, you know, to begin with, there might have been a lot of doubt, lot of skepticism. But when you see that what is the position today, I think on overall level, it has worked satisfactorily. And, you know, ultimately, if you are moving the economy towards the digital transaction and direct benefit transfer, I think it was a very, very fundamental building block for that. So from that perspective, and you know, for the bank, there was always a possibility when you have so many new accounts, when the account which are in transaction, it is for the bank to use them.
Okay.
So it can only provide an initial push. Thereafter, is for the banking system to use it. Yes, one thing I would agree that from the beginning of Jan Dhan account, there were certain assurances of compensating the bank for the transactions, which you know would have been reasonable. That had been hanging fire for quite some time. There had been rethinking on that. I think banking system had put their best foot forward, did a lot of work on them, and in all fairness,
they should be compensated.
Coming out of the bureaucratic tangle, they should have been compensated fairly. That would have been a very, very huge incentive.
I take your point entirely, and just in terms of numbers, 31.2 crore accounts were opened, and of that 25 crore accounts are operative. So only 20% not used, even numerically a great achievement. But I take your point that maybe the banks, especially a bank like State Bank, should have been compensated. 9 crore accounts of these 30 crore Absolutely. Coming from this big bank, and while we laud the private sector, they didn't do as good a job. But Mr. Purwar, let me come to you on another issue, because we have so much to cover. I'm going a little rapidly first. Consolidation. SBI consolidated. BOB, I thought a very neat consolidation of Vijaya and Dena, very undisruptive, at least as of now, non-disruptive, at least as of now. Would that be a feather in the cap, or would you say, I mean, one way of looking at it is they had a great chance to perhaps privatize some banks. Nevertheless, your comment.
See, my submission here would be that the way in which the banking system is evolving, in my view, my consistent stand has been that there is no necessity for such a large number of public sector banks. There has to be much smaller banks. True that, look at the size of State Bank of India. It is able to play a much bigger role because of its size, take a position globally as well as domestically.
No, that point is taken. I'm just asking you whether it is done well, sir.
It has
handled
been
well?
I would say it has been started very well. You see, State Bank of India's merger with associate banks, it was a very good move. It has strengthened it as State Bank. Merger of Dena Bank and Vijaya Bank with Bank of Baroda. Bank of Baroda, in my view, has been the second best bank, so it is very well. You have forgotten one. IDBI Bank, the ownership shifting to LIC, that was another very good move. All these three moves have put the banking system somewhat in a better health than what it was. But this has to be taken to its logical conclusion.
Well, I'm going to arrogate to myself an opinion on this. I seriously commend what you're saying about consolidation, but I'm extremely unhappy that IDBI, where even the law was not required to be changed, should have been kept with the public sector. I mean, after all, LIC has a lot of onerous, unrecognized contingent responsibilities, which will fall on the government someday if things were to go wrong. Should you add another bank to it or invite private sector into it, would be a question. Mr. Mundra?
No, actually, I largely agree with what Mr. Purwar has mentioned. Of course, I would say for SBI, it was like, you know, you bring a pre-cooked kind of food and then give the finishing touches. That was the merger kind of thing. But yes, Bob, Vijaya and Dena, it's like you know, the entire recipe. Well. So that's true. IDBI Bank, I would tend to agree that probably it was one case available where a real privatization could have been done. And the fact that the all stakeholders had moved in that direction considerably at one point of time, it was something like about to be clinched. And then, you know, developments happened and it went on the back burner. So what has happened now is a kind of, I would say, halfway. Okay. It was a great opportunity to really move it to the private sector, and then all related issues should have been dealt with in that manner. If I just take one, if you go back to the history of IDBI, when the reverse merger happened and IDBI, erstwhile IDBI Bank remained as a SBU.
Yes.
merge with this, function like that some point of time, then it didn't work. It got merged and it became like another typical
like
public
ICICI.
sector bank. Probably this was the time to really go back to that model. Take out the part of that part with IDBI, which was really causing the trouble. Deal with it elsewhere. Leave it as a pure retail player or a pure SWIFT player, and then move in that direction. That would have been a good model to my mind.
Okay, Neeraj, one unnoticed part of the last 5 years, or perhaps 3 years, has been actually the private sector getting a larger share, although there's a lot of noise around public sector. How would you rate that as a trend?
So my take, your analysis was very nice, but my take on the whole situation is this. 25 years after we started reforming our economy, we are at a stage where public sector banking system accounts for 70% of public deposits. It's the backbone of financial structure. We have not been able to move the banking system into a largely private dominated industry in a way, right? And even though the last 5 years have seen some trend of movement of the assets and the liabilities to the private sector, and private sector has sort of gained at the back of the issues that public sector banking system has been facing, but it still remains a dominantly public sector industry. Whereas if I compare it with many other industries, for example airlines, for example telecom, for example steel, is banking that special that 25 years after liberalization we still need to retain a dominant public sector characteristic of this industry? I think that's the fundamental question that needs to be answered. Given the priorities that the government has, given the need to do certain things and the requirement of the banking system, you could say that there could be a large proportion of the public sector aspect to it, but does it need to be 70%? I think that question has never been answered, and probably the last 5 years, despite all the issues that we faced, would have been a good time to give that grand plan out to say that what do we want our banking industry to look like?
No, actually, that's the heart of the problem. Two things over here that I wanted to add. We are the only major economy, not counting communist economies, the only major market economy where 70% of the banks are with the public sector. No other country is following in our example, which means clearly we are not leading by example. And secondly, this was the government I thought will do it because they don't have the legacy of nationalization. It was somebody else's problem. So that brave new beginning didn't happen.
If I may just
Neeraj, I'm telling you, I'm really sorry I'm not proceeding on this because we have so many issues. Abhishek lined them up. And IBC, I want to come to that because I assume IBC and bad loans is going to take some of our time. First, Mr. Purwar, will this government be remembered for this law?
I personally feel that, IBC process, the passage of this act, is literally a game changer as far as the handling and resolution of bad assets is concerned. Although it's taking time, it's getting fine-tuned. But today, if you look at any customer of the banking system, there is a fear of God in them. That if I don't, earlier people will take money and forget about it, refuse to take calls in the banking system. Today, no organization in country, if it has borrowed, can afford to take that stance because the business can be taken away. So I am very much a very strong advocate that this is one of the game changer legislation which this government has guts to bring.
Well, I
have taken a very, very bold step.
Okay, I hope I can, we will all agree with you, even in the next 10 years. Mr. Mundra, we have to take a break, but your thoughts, sir, are you absolutely sure this will not go the SARFAESI way and the DRT way?
No.
It will not get clogged up with more than it can handle?
No, let me very quickly tell you, and I fully agree. I think it had been really one of the major reform which can be really always can be remembered as a turning point in the between the lender and borrower relationship. And just to what you are mentioning, see what difficulties we are seeing is the stock problem of the stock. Because there is an accumulated stock and there would be some problem with the stocks, of course not going the 5 or 10 year way. I just don't think it is possible. But what is important, it has addressed the flow problem forever. Stock you will deal with in next 1 year, 2 years. But if you deal with the flow problem forever, I think that is something which is very, very fundamental.
Absolutely. While we go into a break, the verdict from our experts is an A+ on Jan Dhan. an A+ on passing the IBC and, of course, the future performance, and not really an A when it comes to giving a greater share to the private sector, or at least trying to, expand the area of the non-public sector. That is a complaint, that is a point which I totally agree with. Election exchange, state of the markets, and we are going to give a sectoral deep dive into the key sectors and how the NDA government performed. We are dealing with the performance of the banking sector, a large one, and the verdict so far from our three experts, Mr. Purwar, Mr. Mundra and Neeraj Gambhir, has been that yes, it's a qualified positive performance as far as Jan Dhan and IBC are concerned, but well, perhaps a little more space to be given to the private sector and a little less to the public sector. There, perhaps the government has not come up to speed. Certainly not in the IDBI case, which was waiting as an open candidate to be privatized. Well, let me come to the question of what the government inherited, Mr. Mundra. What kind of a state of the banking sector that it inherited? It had a lot of problems.
There were problems. The only thing, problems probably were not recognized at this point of time.
So they showed the courage to recognize, would you say?
See, let me be very fair with it. As far as the whole recognition and AQR is concerned, as far as I can understand and tell, it was purely an RBI initiative.
Okay.
And RBI...
but you need government backing.
Yeah, but this is what I'm coming. So it was, to begin with, it was an RBI initiative. It did a, comprehensive analysis and the situation. But yes, the government never came in way. Wherever the support was needed, government lent a helping hand. All the enabling provisions were put, and there was no, in a sense, whatever interference was there, it was on the positive side to support rather than scuttle any of the moves. So that I must say, that was the basic problem. So what we see today in last 2-3 years is more a recognition rather than the creation or formation of the new problems.
Yes.
So that was one thing.
So you would say they inherited a problem, they had the courage to recognize and do much of the resolution.
Yes, so that was one. But the second part is, why problems were there? Problems were there because, there were lending, there were the projects, projects had their own issues. Ultimately, the financial economy and they are intertwined. It's not that it has come. That is one area where I feel that probably, though it was inherited, it was well recognized, but addressing it probably could have been a little more sure-footed. I feel at some point of time, events overtook the intent. This happened like that.
No, that's a great point to bring Mr. Purwar in. I mean, let us take, for instance, the power sector. Unless you make the DISCOMs pay, how do you resolve the banking sector's problems? Do you think there the government doesn't get such a big thumbs up?
I would put it this way, that taking IPC, inheriting that problem and taking out IPC to address that problem was a brilliant move. But I fully agree with what is being said, that as far as the solution of the problem was concerned, the intent to attack those issues, bring out solutions so that projects get started or whatever happens, that is where perhaps a lot more thinking, a lot more action, a lot more work was required, which I think, while recognized problem, yes, but solutional problem, it leaves a lot.
Okay. Well, one key problem should have been, proactive capitalization. Neeraj, a banking expert whom I spoke to while preparing for this show said that without pointing fingers, the banking sector today in large parts is dysfunctional. 2 rate cuts not being able to transmit it because the intermediation capability itself is eroded. They have to keep a large part of their profits and their bandwidth to only resolution. Not able to transmit banking sector's fundamental, task of loaning, it is not able to do now. Whoever is to blame at the end of 5 years, is that a fair comment? Sector is dysfunctional.
I would kind of broadly agree to say this, that where we are today, it doesn't feel like that we have a financial system and because banking system forms a dominant part of our financial system, which is in a state to support next 10, 15 years of GDP growth of 7 to 8 to 9%, which is our aspiration. So there are multiple problems. First issue is the capital level in the banking system. While the points have been made about the recognition, I think part of the problem is that while recognition was started in time, maybe a bit late, but it was started nevertheless in this government's regime, the willingness and the ability to pump in capital quickly in a very determined fashion was not there. It took a lot of time for it to come. Now, I would say that the government also inherited a very weak fiscal position.
Yes.
So it wasn't really just their willingness, it was also the ability because of the way the fiscal position is at a given point in time. But I think nevertheless, that created this whole sense of that the things are getting dragged on. Resolution is not happening quickly, recognition is not happening quickly, banking system is not getting recapitalized at the pace that which it should have happened. So that has kind of created this sense today that we are in a way not very effective in terms of financial intermediation and in terms of transmission. I think both of these issues are kind of interlinked, and the next government's agenda should be to bring this back on track, do a more deterministic, and I think the solutions exist, not just the direct capital intervention, but also structured ways of dealing with the solution outside of the domain of capital interventions. I think that's something that the next government needs to really focus on.
Okay. The other initiative of this government has been Mudra, that banking sector money has not flowed to the MSME and the SME sector. Successful? What is your comment, Mr. Mundra?
It's still early days to take a final call, but if I look at the credit growth figure of this year, and particularly the credit growth in MSME sector, which is probably 0.6%. So it's not something to feel very happy about it. See, yes, by design, by intent, all these schemes are always good. Like policies, I said no policy you will ever found wanting. All the policies are always international class. I think the problem lies with the implementation. And say typically what happens that if any particular scheme is very number driven, the players either are not willing or really they have many other preoccupations that they have to find a way of still meeting those numbers but really not getting too much involved into it, then shortcut starts coming. Like, if you have 3 kind of eligible candidates here, what you call Shishu, Tarun and Kishore, and the requirement of a Kishore, of a full-bodied young man, if he is being fed with the diet of a child, that is Shishu, then it will meet the number, but it will not meet the intent. I think that with that analogy, I see we are somewhere there in this scheme to my mind.
Okay, well, I believe the NPAs have spiked in that sector. Any thoughts?
You see, I'm not been a part of the system so far, but still whatever little knowledge I have, yes, the NPAs are growing in that sector. But we must try to analyze the problem and try to find solutions to these issues. Okay. I fully agree with what my friend said. Let us not be number driven. Let us also, along with the number, quality driven.
That's a great set of ideas and analysis that has come from my guests. To wind up, the government gets an A+ for Jan Dhan, for IBC, and for the limited consolidation that it did of the State Bank Group and the BOB Vijaya Dena consolidation. Gets minus marks for not grabbing the opportunity to get a private sector party into IDBI. But the negatives for the performance of this government, partly my experts' view, partly mine, so let me be honest about it. I would think that imposing the costs of Jan Dhan, Mudra, demonetization on the banking system has actually weakened the system without commensurate gains or without compensating the banking system, at least too late in terms of capitalization of the banks and not at all adequate resolution of the real economy problems, which is what is being reflected in the banking system. My personal view, and we don't have time to go for a vote, the banking sector, or at least large parts of it, is weaker today in 2019 than we inherited it in 2013. History will decide otherwise, or history will take its own judgment, but it was a very, very important period in the evolution of the banking system, the last 5 years of the NDA government. Mr. Purwar, Mr. Mundra and Neeraj Gambhir, thank you very much for joining me in this conversation.